All right, guys, welcome back for another video. In today's video, I want to do a little bit of a high time frame analysis, looking at the quarterly chart, looking at the monthly chart, looking at the weekly chart as well. So today is October 9th. So we're, still pretty close to that Q4 open, the quarterly open during Q4 that started in October 1st. So we just got our quarterly fourth quarter open. We also, are not that far away from the monthly close. And we just got our first, or we are going to get really our first weekly close of the month, into that first month of October. So again, when I do these type of things, I like to start out from the high time frames and kind of work my way down. And again, I think the quarterly really puts things in perspective, right? I mean, you can see kind of how this is a very, clear retrace into the previous all-time high coming in from 2017. You know, very, very symmetrical price action right here, right? That, if you're looking at it on the high time frames, right, this certainly looks like a, uh, you know, area of opportunity at the very least. Now, before I dive into the monthly, I do want to kind of touch on these charts right here. So this is showing you that, following the capitulation in June, that last push from roughly 30K down to a little bit close to 17K, you got some of the highest net realized P&L adjusted for market cap. And actually within that short period of time, if you looked at like a 14-day period, actually some of the, the magnitude of the capitulation within, that final push in June was actually the highest ever. If you look at like a 14-day trailing realized loss. But if you look at it in aggregate, some of these are a little bit bigger, but that's also a product of the time spent at the lows, right? So if you have a violent V shape like you did in March 2020, you don't get as much capitulation because people just don't have time to capitulate, and that may not make sense on the surface, but capitulation is a product of time as well. It's not just a product of time. How low does price go in a flash crash and then rebound? Really, what makes people capitulate is when price crashes and then hangs out at the lows for like a long period of time. That really drains the spirit and just demoralizes all the bulls. And typically that is the area where you see bottoms form, right? These very high time frame downtrends, they tend to they tend to gain momentum until they peak in capitulation, and then that generally marks the end of the downtrend. Now, the other thing that typically happens, if you look at these charts, right, you can tell that, so you've got 2015, it's peaking here, 2019, it's peaking here, and then, of course, summer of 2022. So if we go here, we've got Bitcoin realized cap hodl waves. This is coins held for 3 months or longer. These are people who can't be characterized as short-term holders. You can see that those peak basically at the same time, right? Peaking around the 2015 lows right here, peaking at the 2019 lows right here, and also peaking right now basically at the 2022 lows. So what this is showing you is that, as what's happening here when people are capitulating is coins are being transferred from more speculative type market players to market players with what would be considered to have stronger hands and have a longer time horizon. So you're seeing a active transfer, since June 2022 from weak hands to strong hands, and that's generally a classic bottom signal that you see. Typically, it's really what you want to see, right? And the flip side, when you see these strong hands, start to sell into the rally, that, of course, the rally can get a little carried away. But, it is a sign that, even if price is going up and you seeing these strong hands distribute into it, it's not a good long-term hold, right? You want to be on the same side as these these addresses who, typically are considered strong hands and don't really have a history of distributing or selling at the market. Now, what's interesting is that you know these wallets did distribute here at this distribution pattern in spring 2021. It's difficult to see here, but it's a very clear Wyckoff distribution pattern if you were to look on the price chart. But what's interesting is they didn't. I mean, there was a little bit of a dip here, and but then like ever since the top and the run of the all-time high, uh, none of these long-term holders have distributed into this. They just continue to accumulate during this downtrend, which is, this is lends more evidence to the idea that, the real bull market top was in June, excuse me, March 2021, or really April 2021, when Coinbase actually went public. Um, and yeah, we did get a little bit of a throw over the all-time high, but um, you know, if you just look at these like underlying fundamentals, maybe the RSI, um, yeah, price technically did breach the all-time high, but really, it's sort of a bearish consolidation and breakdown ever since April 2020, excuse me, 2021. And with that in mind, we're typically kind of at the point in the market where, you know, roughly the bear market's been going on for like 18 months. And the other carryover from that is that, since we saw a throwover on price action, and by that I mean, this one throwover above the all-time high, what's going to happen is the next time price runs and just runs above the all-time high, a lot of people are going to fade that because naturally that's what happened the last time, right? So people naturally apply whatever happened last to whatever's happening currently. So before this throw over the all-time high, there had never been anything like that, right? Every time the all-time high got breached, you got immediate follow through, and people were conditioned for that, right? But of course, the market doesn't always give you what you want, and the market ran just above and ran down. Well, now when the market runs up there, you're going to have an entire skew of market participants who are shorting the market when it gets up there, and that just is going to add rocket fuel to the upside. Again, it's not a guarantee that it will happen, but it's extremely unlikely that you see the same pattern play out twice, right? Generally, what you see is people looking for the same pattern to play out twice, and because everybody's looking for it and associating the current moment with that previous moment, that's exactly the reason why it doesn't happen. Generally speaking, of course, anything can happen, but generally speaking, it's a good rule of thumb. And anyway, so that kind of sets the stage for a massive disbelief rally in Bitcoin because, if you don't believe, like for people who are accustomed to viewing, a run above the all-time high as a throwover, there's really no area where, price could run all the way up above the all-time high and people would still not believe the rally, right? They would say things like they don't trust it or they don't believe it. So it's kind of engineering a situation where people who are extremely bearish right now, they're not going to flip their bias until price just totally bulldozes through the all-time high, and you get a proper bull market. Anyway, so we looked at the quarterly chart. Again, the quarterly is just beautiful. I should mark off the quarterly open. It's going to make less sense here, but it'll make more sense when we go down to the daily, even the monthly. So we get a quarterly run down here into the all-time high. A little bit of an indecision. Again, it doesn't have to be a pivot every time. You can get an indecision. And then another quarterly open. So let's go down to the monthly chart. Yeah, monthly chart's not really showing anything different, really. Let's see. Yeah, not a whole lot. The weekly chart is very interesting. So here, you do. What's really interesting is what's going on in the weekly RSI. So the weekly RSI came down and hit the most extended read it's ever hit, and then put in a weekly bullish divergence right here. Well, actually, right here and right here. And would you look at that? It actually confirms it right at the quarterly open, right around the quarterly open. And by confirm, I mean taking out this week's high right there. So this is typically very characteristic price action of, when the market does turn around. And really, this is really a historic moment in Bitcoin because Bitcoin, first of all, the weekly came down to the most extended read it's ever been at. And not only that, but then confirmed weekly bullish divergence, which there has never been weekly bullish divergence in Bitcoin. It's a historic first. Also coming in off the most extreme read. Now, if you guys are familiar with trading the RSI, you know that the divergence is most valuable in when it reaches an extreme read, right? So you want to trade like divergence here and here, for example. You don't want to trade divergences when the RSI, maybe say sets in a divergence around the midpoint or just above the midpoint or below the midpoint. Those would be considered statistically less significant than the ones coming in at the historical extremes. So again, we don't technically have a close above this high, which is what a lot of people would be looking for to confirm this, but we do have both weeks trading above the previous week's high. So if you use that as any type of confirmation, well, at the very least, it's a warning shot against a bearish bias, right? The market's kind of telling you that, okay, the market capitulated into this level and it's holding this level of support. You get bullish divergence coming in around this level, and the market's generally defending the level. Buyers are stepping in, pushing price above the highs. It's generally what you'd want to see. Now, you haven't seen the momentum come in, right? You haven't seen the stochastics cross up. You haven't seen the, really any of the highs taken out. But what you are seeing is a broad indication that, buyers are stepping in at the market, which is what you want to see if you're treating a level of support, right? Because, we may see a level that we may draw a line in our chart and, price hasn't approached it yet, but unless you have to wait for price to approach a level and see the type of reaction that is characteristic of buyers stepping in at a level in order to be able to confidently call it a support level, right? You have to see that reaction come in real time. Until you see that, any support line you've drawn on your chart is just a line you've drawn on your chart, right? I mean, just because you've drawn a line where you think buyers will step in doesn't mean that buyers will actually step in at that level. So you need to see that signature in real time, and that's the type of signature that we're currently seeing in the market. Now, if you go to the 3-day, you also kind of see the same, divergence pattern playing out right here. Yeah, well, you actually see it pretty dramatically here. So let's see. Yeah, so you got 3 drives here. So you've got this low here, this low there, and this low there, which is actually where I got my entry on this position. So boom, 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 3 drives, and then start taking out the highs. So I like this distinction. Again, it's characteristic of what I want to see if, if this level is going to act as support. And again, I don't want to forget the fact that, we have these quarterly, these vertical lines represent the quarterly open. And that's very important when you're talking about the high time frame. So, we get the quarterly open here, and this downtrend coming off the capitulation turns around and mounts a little bit of a rally, for about a month and a half from roughly here. So you get your quarterly open here, and then price comes up, runs liquidity above the highs. That's a change in behavior, right? Before that, it was generally speaking running for liquidity below the lows. There's your break in market structure, comes down, defends the lows, starts making new highs, higher lows, higher high, higher low, higher high. And then you get market structure break here, but you had a good, you had a quarterly open and then, change in behavior, right? So people may be like, well, this is still tradable and still significant and still occurs around the quarterly open. So even though, yeah, it did come down and revisit the support, this is still a very tradable distinction, right? And maybe you had been in a major short coming off this level, and maybe you said, hey, the quarterly open is, we're getting a new quarterly open. Maybe that's a good time to, kind of take risk off the table, kind of reassess what the market's doing, and that would have been a great move. Now, I think, we've got the same kind of characteristic coming here. Again, these lines are the 3-day divergence, but you also got the multiple drives of, this was a low on the daily that the 3-day didn't pick up, but you still got the multiple drives coming here. And then you can see how, you get those pushes down for liquidity and then the drives up. And then the market starts to kind of create this rounded bottom and start to break up above and create higher lows. That is exactly what you want to see. Again, I really feel like I got lucky, really getting like the perfect position here, right? Like this is a position where, if this is, a significant macro level, then this is a position I'm going to be really glad I have, and I'm going to want to hold on to it for a while, and of course hedge it here and there, but try to really hold on to that, because it's not that often that you get positions that good. So in the spirit of kind of focusing on the quarterly open, let's see, I think I took that off the chart. So I know I had mentioned before that I want to anchor the quarterly open to the left side of the chart. So really what I want to focus on is the swing that, comes after the quarterly open, right? And this is a concept I've mentioned multiple times in previous videos, but it does hold true, right? I don't want to get caught up too much in historical price action, because again, I want to anchor the left side of my chart to this quarterly open. I may use like a short-term, high around there, but beyond that, I'm not going to be looking back months or weeks. And ultimately, price did work liquidity around here, ran up above here. I bet the RSI started putting in divergence kind of around that level. Yeah, not really, but if you went on the 15-minute chart, you'd see it a little bit better. So you get a run above the stop loss orders up here, also probably stop loss orders up there. This is probably a better way to mark it off. So you get a run up there, just above, right? Come back down, set in this intermediate time frame low. This was the swing low that we marked off that we wanted to pay attention to. And, if we were looking for price to continue immediately, we would want to see this low defended and price run. But ultimately, price made another run for the high, didn't break through, came back and actually broke this intermediate time frame low, which is where I had a stop loss order. And then it came back, ran down for this level right here, this liquidity base at the beginning of the liquidity base at the bottom of the swing that we're looking at, or roughly the top of this candle right here, which is also confluent with a run of these stops, right? Which would be more significant if we went down on a 15-minute. But anytime you see a push down into a level, like say a liquidity base like this, that's also confluent with a stop run, that's confluence, that's the type of signature I like to see. If we go on a 15-minute, you can see, how this thing is kind of playing out here. So again, we see, on the hourly, you see a run down into that level, run the stops below here, run into this liquidity base, and you get the higher low in the RSI. And then you fill this price extension, right? Price comes down, runs below these stops right here, fills this price extension right here, comes down, defends the lows, and then runs up above. Then you can mark off, again, the same concept that we did here, mark off these highs right here. You can do the same concept here, mark off these highs right there. You see how price is very fractal in that sense. Anyway, I hope you guys like this video. If you guys do like this type of content, Make sure to leave a like on the video, subscribe to the channel, and I'll catch you guys in the next upload.